Mike Sullivan. I'm a former IRS agent and teaching instructor. I worked at IRS over a decade. Welcome to my YouTube channel. They're short, they're sweet, and to the point. You can always leave comments. I'll answer questions that you leave, or you can bring up subjects you'd like me to cover. As a revenue officer, I issue thousands of levies, bank levies, wage garnishments. Just that was part of my job. I can't tell you how many millions of dollars that I collected. And today, by the way, one of my jobs here is to kind of tell you the truth about how IRS operates, to kind of unveil the curtain and say, hey, this is how IRS really works, and not all this gobbledygook you hear from other people. So at the end of the day, I want to talk to you about how to stop a bank levy or a wage garnishment levy, or just how to stop a seizure action by Internal Revenue Service. The answer is really simple: by calling them. IRS sends you a series of letters, CP 2000, 501, CP 503, CP 504, 1058. When you get these notices, at some point in time, you have to call IRS. You can simply stop IRS in their tracks by picking up the phone and say, hey, IRS, I want to resolve this case. And they'll say, okay, what do you want to do? Say, give me a 30-day hold. What do you want me to do? At that point in time, IRS usually will say, we want a financial statement or tax returns by a date. So IRS usually will freeze your case. Sometimes they'll give you 60 days, and then you call them back with the information, and then they will close your case. But here is where the problem lies. If you don't have any idea how they're going to work the case, don't work the case yourself. But I'm going to tell you how you can work the case by yourself. I don't suggest you do that. It's a tad complicated, and let me explain why. IRS wants a Form 433F if it's up at the service center, or a 433A if it's with a revenue officer. Those are IRS financial forms. They're going to want them documented. They're going to want pay stubs. They're going to want copies of your expenses. They're going to want your bank statements. And then IRS is going to look at those and say, after they evaluate them, they're going to say, gee, we'll probably either put you in hardship, or they're probably going to say, we want a payment agreement. What you have to understand is that IRS has what's called national standards that they use for your expenses. So what's the national standard? Well, for food and clothing, for housing and utilities, for your car payment, your travel, IRS says this is the only amount we're going to allow you to live on. The IRS national standards are online. You can put IRS national standards food, IRS national standards transportation, IRS national standard for housing and utilities. So if IRS allows you $4,000 to live in the county you live, and you're making $6,000 a month, you've got $2,000 left over. IRS says, we want that $2,000. So there's a lot of tricks you can do that I don't really disclose here. They're kind of my tricks. So at the end of the day, the key is knowing and having an exit strategy when you call IRS. If you're calling IRS and not knowing how they operate, you're going to have a really bad hair day. So be very careful. But you can stop IRS with that initial call so you don't have to worry. Two things really important. Make sure, if you're a do-it-yourselfer, make sure you file all your tax returns, and make sure your withholding and estimate payments are up to date. So if you like what I'm telling you, I'd appreciate a like or a subscribe, and there's a little notification bell. If you'd hit that, I would appreciate it. If you have a subject you want me to cover, let me know, and I'll cover that subject for you. Thank you so much. Me and my M&M man appreciate you. Take care.